Hello and welcome to the Ultimate Bull Run, where we bring 100 bulls, 100 stories in this one legendary run. Our mission is to celebrate the journey and a process of trading and investing rather than just focusing on the numbers. And today, we have a special guest known to many as a Crypto Anon, short form for Anonymous, a crypto intel specialist who is here to share his journey and some valuable insights. So please join me in welcoming this Ultimate Bull, Crypto Anon. Welcome to the show. Welcome to the Ultimate Bull Run.
Thank you. Thank you for having me.
Thank you. It was our pleasure to have you in the show. Let's just start at the very beginning of your journey, right? So, Anon, what sparked your interest in crypto, and how did you make your initial transition from fiat currency to the crypto?
So that's an interesting question, right? Because the person that's behind the mask here has a story, and then the mask itself has a story. So if we're going to dive in, let's dive into the person behind the mask without trying to reveal as much as possible. That person has been in the space since 2016. I was introduced to cryptocurrencies by a sibling of mine, and I was very skeptical, just like many were around that time. I held an executive position at a very prestigious company, and I was very skeptical about getting involved in something that many people were calling illegal or scam. So at the time, I didn't really pay much attention to it until a few months later when he started to uh, show me that the price of Bitcoin was rising, and that piqued my interest. So when I began in the space, really at the end of 2016, 2017, um, I really just fell in love with the potential of decentralization and anonymity. Because coming from an executive in a financial institution, I know that all we do is data collect and collect data. Data is king. So the more data we collect on our users, just the more value we have to sell. And therefore, when I dove deeper into crypto, I just really fell in love with the idea of the anonymity aspect of it. Fell in love with the anonymity of crypto, fell in love with the idea of a decentralized governance, uh, more of power and control to the people, more of your ability to control your financial future instead of leaving it into the hands of corporations. And that really piqued my interest. So in 2017, I got involved in the ICO craze back then. The initial coin offering craze was just exploding, and projects like Tron came into the scene. So Tron was a big 2017 project that I was involved in. I accumulated a bunch of other altcoins at the time, including your typical Litecoin, XRP, and I built a portfolio around that. Binance Smart Chain at the time had just debuted, and it was trading somewhere around $2 to $3 that summer. So it was just a great time to believe and bet in the future of the space. And December 2019, on that last month spike of that market, the returns were so exponential to my investment that I was just hooked. And during that time, I just started to explore more deeper into the space. And as January hit and the market began to correct in 2018, I just said to myself that there must be another way to make money in this space. So a colleague and a friend suggested that I figure out ways to make passive income in this space. And at the time, the space was just riddled with scams and Ponzi schemes. BitConnect had just fallen apart, and that was one of the big ones from that era. So BitConnect had fallen apart, and there were many places you could find just passive income opportunities in crypto because Ethereum was still proof of work. Pretty much everything was proof of work at that time. Staking wasn't really a thing. And then the masternode space was birthed into the 2018 era. Masternodes for a brief amount of time, for about 4 or 5 months or so. Masternodes really reigned king, and a lot of projects like Pivx, um, just some projects from back then. Dash is one of the ones that still survived. So all these projects had masternodes, and essentially you would lock in a collateralized amount of tokens, and you would earn interest rates based on the yield curve. And that was really appealing to me. So we decided to start a hedge fund. And then a group of us, we built a hedge fund, and it was one of the first passive income generating hedge funds in crypto. And so as we built that hedge fund and we began to scale it, I just really became an expert in this space when it comes to generating passive income. And in the summer of 2018, as Uniswap came into the scene, it was really just a very interesting time in crypto. I believe it was summer 2018. I may get my guess it was. Well, Uniswap came into the scene and it just introduced decentralized trading. And as decentralized trading began and became a thing, liquidity provisioning became a thing. And that sort of began to catapult the next phase throughout 2019 of what really the future of crypto looked like. So for that time, we focused solely on building liquidity pools. We focused solely on generating returns for our investors. And that led to 2019 us wanting to launch our own centralized exchange. And so in 2019, we began to work on a centralized exchange. And as we began to build that centralized exchange in 2019, we actually were overshadowed by the launch of FTX. In May 2019, FTX came into the market, and we were just a few months behind them. And by the time we came into the market, FTX had really just began to corner a lot of the traders that wanted to trade with contracts and perpetuals. BitMEX was king prior to FTX. BitMEX and Binance are really the drivers. But BitMEX was really the king up until Binance really started to step up and FTX at the time. So during that period, we just didn't have enough liquidity to really fulfill a centralized exchange the way that we wanted to. So that project failed, and that was my first real loss in crypto, where we lost well over $1 million on building a centralized exchange. So after that loss, I just sort of crawled back into my own world and just focused on my own personal finances, trading on my own, and really just focused on the hedge fund at that time. And as 2020 hit and COVID and all that time, the market just really died. People thought crypto was dead. Bitcoin flash crashed on March 12th. Bitcoin flash crashed to right around $3,000, and everybody thought that was the end of crypto. And it was really one of the greatest buying opportunities of our lifetimes. So we did well in 2021. We did very well. We finished the hedge fund. We closed the hedge fund, and I just prior to that, in end of 2020, I went into the educational space and I built a bunch of content, which is what that persona has done. Built a bunch of content, and we built an education company in crypto that did very well, did multiple six figures in 2021. And at the end of the bull cycle, I was just so burnt out with crypto by the end of 2021, um, that I had made so much money, and I was really just burnt out with helping people. It would it was just too mentally taxing for me. So after 2021, I just decided to walk away and take some time off to enjoy the fruits of my labor. And it's been about 3 years now, and now I decided to really make a comeback into the space and just do it differently. I wanted to have more fun. I'm still an executive in the space in other areas. That's hence why I keep my anonymity. Maybe one day it'll be revealed. Maybe not. I don't know. I have plans for this project. I really do enjoy what this project is evolving to, and I'd love to discuss more about that with you.
Awesome. That is a fascinating story. Indeed, since 2017 and 2019, bull run was full of ICOs, and BitConnect, like you mentioned, was one of the driving factor for the downfall of the crypto again during that time. Bear market started. A lot of ICOs who raised the capital through Ethereum started selling off, and then again it came. The bull run started coming up again, and now we are at in 2024 with the Wall Street on our side, with the ETF and everything. That is really a fascinating story. Thank you. The early days in the crypto, it can be quite challenging, right? What are some of the biggest challenges that you have faced when you first started out, and how did you kind of overcame those challenges?
Well, it's worth noting that when I started in crypto, the landscape was very different than it is today. So you won't likely face some of the same challenges that I face. One of the main challenges for me in those days was on-ramping fiat, which now is one of the easiest things to do in crypto because, well, there's so many platforms in which you can do it. The other one was education. There just really wasn't any education available in 2016 and 2017 in those days. You sort of just had to figure it out on your own. And that, unfortunately, just often led to many losses and just a lot of trial and error. Today, I think the space it's in an interesting phase because there is plenty of education out there if you choose to take a traditional approach into entering the space. And there's a lot of just volatility and scams and things that just weren't as prevalent in 2016 and 2017 when I started. There were scams, yes, but not to the scale of what exists today because of the ability of participants to just be able to launch tokens with the click of a button. There is no recourse, right? So anybody can stay anonymous, launch a token, rug pull the community, and then disappear off the face of the earth, and they can do it again and again and again and again and again. So trust is become in a space that was designed, right, to operate in a trustless manner. Trust, ironically, has become the one thing that it needs the most of. And in this space, in the current landscape, it's just very difficult to trust. Even though all the information is public, the intent of the actors behind it is still unknown, which makes it very, very difficult for you to want to, engage in any activities on here. So what you're seeing is a lot of, participants that want to get rich quick. They come into the space and they want to play on the meme coins, and they get upset when they don't get rich because other people have done it, and so they keep trying to figure it out. And the reality is they're just exit liquidity. They're just exit liquidity for someone who's just a little bit smarter than they are. People often ask me, well, how do you invest in meme coins? And I tell them I don't. If I was going to invest in one, I would just start one. It's the only way that you can. It's the only way you can guarantee the outcome is if you launch your own. Otherwise, you are at the mercy of the creator. And unfortunately, because it's such a simple way to cash grab and take money from someone, it's just very easy for scammers. Think about it. People underestimate what $10,000 is in a third world country. People underestimate what $100,000 is in a country like Argentina or India or Africa. So these folks don't have to scam you for millions. They can scam you for tens of thousands of dollars and they can dramatically change their life. So in this space, it's just very attractive for people from that type of demographic to just behave as bad actors because the opportunity to make a quick cash grab is just so lucrative.
True, true. That is very true. And when you mentioned it out first, the landscape of the crypto from 2016 to 2024 has drastically changed as well. When I started out first, I did not know where to buy my first Bitcoin from. I was just going through and reading articles on where to buy it and how to buy it. And finally, I found the Coinbase. Like after like a half day of researching, now the things have changed. However, there are lots of scam going on. Like you said, it is for the third world countries. Even $5,000 or $10,000 is a big amount of money. And it's better to kind of avoid those kind of scams rather than just and that is being part of the journey as well. Moving on to the securing the digital asset, right? It is very, very crucial in crypto space since there is no central authority to turn to if things go wrong. So with this freedom crypto provides, it comes with the responsibility as well. Can you share some of your personal experience where proper asset security saved you from potential loss, and how do you kind of identify if a token or a crypto is a scam?
Well, if you're starting in this space, it's very difficult to discern what is real and what is not because, well, everything looks good until it isn't. And scammers over the years have gotten very, very, um, I guess, witty and sharp, and intelligent on how to create, copied landing pages and all these phishing sites, right? Which seem like the real deal. And email phishing has evolved now to a stage where you can get email notifications from what a site that would seem like a major exchange, right? You may get an email from Binance requesting you to change your password, and you're like, okay, well, this looks legitimate. Someone tried to hack my Binance account, and it turns out to be a phishing email. So scams have gotten very elaborate. So for you to now protect your data and protect your assets in the space, you just have to be very, very diligent. You have to be aware. I call it the sniff test. If something doesn't smell funny, or something smells funny, or it just doesn't have that, it doesn't give you a good feeling, probably don't act on it. Right? Probably don't act on it. No one should ever tell you need to change your email, your password to your account. That's not, exchanges don't do that. Companies don't really do that. So when you get all these type of approaches from scammers, there's always a sense of urgency, right? Scammers always want you to act in a hurry. Quick, take action now, do this now, or you lose all your money. Do this now, or this will happen, right? So they need to operate in a sense of urgency because they need to make sure that you can't think straight. Because if you can think straight, then you can probably tell that there's something off here. So whenever you see anything that has an insane amount of urgency behind it, like you need to act now or something bad will happen, then most likely it's a scam. It's somebody trying to scam you, somebody trying to access your private keys. So in this space, you need to really just be mindful of that. Never share your screen. No one will ever, no matter what kind of tech support they're offering, no one should ever ask you to share your screen and show you any sort of private keys or passwords. None of that stuff. So some of the things you need to be mindful of in this space is that there are no password recoveries, right? Web3 has no such thing as password recovery. So if someone's asking you for a password recovery or some sort of way for you to recover your password, just know right out of the gate, it's a scam. You cannot recover passwords in Web3. You can only re-enter your private keys and create a new one, right? So your private keys are everything. You need to protect your private keys like your life depends on it, like it is your money. When I write down a private key on a sheet of paper, I am mindful that whatever money is in that wallet, it's what's on that sheet of paper. So that paper now becomes a $10,000 bill, a $100,000 bill, becomes $1 million bill. So if you write your private keys on a sheet of paper and then just toss it to the side like just common waste, then just realize you took a $10,000 bill and just threw it to the side. You wouldn't do that with real money, so I don't understand why people do that with their private keys or they'll store it on their cell phone or they'll store it on their computer. And I'm like, you wouldn't leave a $1 million bill on your computer for anyone to see, right? You will guard it with your life. You put it in a safe somewhere, right? And protect it with firearms and your whole life. So why people don't do that with crypto? I think it's because the space has been gamified. It's been gamified to make it seem so simple and so easy that you don't pay attention to the fact that you are safekeeping sometimes tens of thousands, if not millions of dollars on a private key on a sheet of paper. So if you don't take it seriously, if you don't protect it, and if you don't take action to safeguard your assets, the only outcome is you'll probably end up losing it. How many times have people lost their private keys and can't find them, and there's thousands of dollars stuck in a wallet somewhere, right? Yep. As a matter of fact, it's somewhere around I think it's now 3% of all Bitcoins. It's somewhere around, I want to say close to 1 million Bitcoins now, or somewhere around there. Don't quote me on the price, but there have been close to 1 million Bitcoins, if not more, that have been lost to poor security. Either people losing their private keys or losing access to their wallets. So that's billions of dollars in today's money, right? Just through carelessness.
And it is a cool way to see. I mean, I never thought it in a way that you just said. If you write it on a piece of paper, that piece of paper is worth the amount that is in your wallet, and that is a really cool way to see it. And if I meet anyone or onboard any more people, that is exactly what I'm going to say.
You can use it. It's not trademark.
Yes, that is true. Moving on to the decentralized finance, the DeFi space, right? It offers a numerous opportunities, right? What are some of the the early hurdles? Like it is not the same now than it was a couple of years ago. What were the the early hurdles that you encountered when you were navigating through the DeFi? And how did you learn to leverage these platforms effectively? Like there are different parts of it: lending, borrowing, yield farming, right? How do you could you kind of explain what these are and how authentic they are to making money?
All right, so there's multiple questions there, right? So I'll try to go in order and remind me if there's one that I don't answer. All right, so one of the first challenges that I ran into DeFi was the fact that it was very difficult to calculate what the annual percentage return rate would be, just mainly because the APY of liquidity pools fluctuates based on the fees being collected and the transactions that are taking place. And at the time, Uniswap, until this day, Uniswap fails to give you an accurate representation of what the APR is on a pool. You sort of have to figure it out on your own. Um, and so one of the main challenges that existed back then is that you had to have all these calculators and all this math just to figure out which pool was lucrative, and it was a very, very time consuming process. Now you can go to platforms that are yield aggregators such as Beefy.finance or Alpaca.finance, right? You have so many out there that you can just go and they'll tell you what the APY on the pool is and the APR. So it's just much easier to calculate. The thing that is very interesting about DeFi is that most people are not aware of impermanent loss. Impermanent loss is a real thing, right? Which is as the pools rebalance in themselves and the price begins to go up on the token, you end up getting more of the token that's worth less. So if the pools are rebalancing, if you went in on a liquidity pool that was a meme token and an ETH, and all of a sudden ETH begins to go up in value, you're going to end up getting a lot more of the meme token. And perhaps that's not what you want when ETH is going up in value. You don't want to keep accumulating more meme tokens. So as the pool rebalances, you begin to experience impermanent loss, and a lot of times that loss is greater than the potential gain of passive income. So you need to understand how that mechanism works. And it's one of the things that I focused on teaching on my courses was how to figure out what impermanent loss was. The other challenge that is taking the space today is just the validity of these pools and smart contracts. Which ones are real? I've watched protocols. A few years back, there was a protocol called Iron Finance, and Finance was backed by Mark Cuban and a bunch of other, wealthy investors, and it reached a $2 billion TVL in the span of a week. And what it did is it was very similar concept to what Terra did in Luna, which they had a algorithmic backed stablecoin that was backed to their token called Titan. And Titan will, back this stable coin, and you can redeem it. I think it was like a 70% stable coin, 30% token volatility. Well, they had an issue with the time weighted average price contract, which made it so that the price of the Titan token didn't reflect on the smart contract until about 10 minutes later. So what ended up happening is people figured it out. Insiders figured it out, and they began to exploit the smart contract. And before you knew it, a $2 billion protocol imploded within 48 hours, and it was done. And some people had literally their life savings on there because it was yielding a very, very attractive return on their stablecoin, very similar to what Luna did. And if you had your funds on Luna and Terra when they collapse, you already experienced what that's like. And you think, well, I'm earning yield on my stable coins. That's safe. There's no volatility, but you can't account for the collapse of the smart contract. You can't account for the exploit of the mechanism. You can't account for somebody who's quite frankly just doing poor math. So with that being said, there's just so many factors in the DeFi space that you have to take into consideration that it is not passive management, it's passive income. You have to actively manage your DeFi portfolio. It's not a passive management style. You need to actively manage it. The income, yes, is passive, but the management is very active.
Those are some sweet knowledge right there. And it is, the concept itself is a little complex, so it's better to kind of get more educated before you get into it. And again, like you said, you have focused a lot on your course as well. So all the audience who are interested in it, I'll put the description below. They can check that out. And yes, it is true regarding the algorithmic. It was one of the biggest one in 2021. The algorithmic stable coins, and all of them are collapsed. What do you say about the Yearn Finance? It is some kind of aggregator, right? Are you?
Yeah, so Yearn, which built on the, I believe it's the token is YFI, right? It was built on the
Yeah.
Phantom network by Andre. For a period of time, he was one of the leaders in crypto. Period. But then when he decided to walk away from the space for a bit and focus on other things, I mean, it was really collapsed. I remember YFI trading at $87,000, which was almost 1.5 bitcoins at the time.
It was, yes, yes, indeed. And
And
a lot of people are hoping that it will go back there, but
that's likely never going to be the case. It's just when you look at the amount of sell pressure a token like that has on the way back up, of so many people just holding heavy heavy bags, right, in order to just recuperate some of the losses, it takes a lot of interest into the project in order to drive the price up there again. And the reality of it is, there's just much better yield aggregators out there in the space now than Yearn. And to be quite frankly, unless Phantom, the chain itself, FTM, does something, which I know they have some updates coming up now. So if they do release, I believe it's called Sonic, is their upcoming network upgrade. If that succeeds, you could see a resurgence of FTM and Yearn and these tokens, which I believe YFI is trading somewhere around $6,000-7,000 around this time, which is down 90 something percent from the all-time high. The reality of it is, anything you buy in this market that is a solid project, there is a potential for an ROI in a bull run, because in a bull run everything pumps. There's just so much liquidity coming in, everything pumps. The difference is, some things pump at 5-10x, other things pump 1,000x, right? Some others just outperform projects. I don't think any of the 2020 projects are ever going to do another 100x or 1,000x. That time has passed. They've already done it. They're not going to do it again. Mathematically, it just doesn't make sense. So because projects like Polygon is not going to do 1,000x. FTM is not going to do 1,000x. That will put the token at somewhere around $350 or whatever the case is. All right. So 1,000x in FTM is not possible now, because it almost already did it, right, from the launch at less than a penny. So now you're sitting here, and there's so many new projects that are out there that are just better tech stack. So many network upgrades have come out since then, right? Bitcoin staking is going to be a thing now in the next cycle. Most people are not even, everybody's sleeping on Bitcoin staking. Bitcoin staking is going to be a big thing on the next cycle. Bitcoin smart contracts is going to be a big thing with ordinals, right? So there's a lot of things that are going to change the dynamics of the next bull run, where holding on to these old assets, to be quite frankly, is probably a fool's game at this point. You might as well just begin to look at what is going to be the narrative in the upcoming bull run, because then you can begin to diversify into assets that could potentially do 1,000x, 2,000x, 10,000x, right? And that's why I focus so heavy on finding these heavily funded IDOs or ICOs, or whatever you want to call them these days. They call themselves so many different things. But there are so many projects now that are being funded with hundreds of millions of dollars that are just flying under the radar. They don't even have a token yet. But when the time comes and they tokenize, there's going to be a massive opportunity there for you to ride those, massive influxes of cash.
that is true. That is true. And do you believe like it is just going to be a new wave of IPO? The reason I ask that is a lot of companies who were kind of established in 2017, most of the company were sued by SEC for being a security, including Ripple, which is one of the most used case crypto that I've seen in terms of banking and in terms of international payment settlement, right? When we talk about the team itself and the project they are leading versus the security, the government, the law, How do you kind of navigate those two things? And even FTX back then was one of the biggest project, right? And no one will know until, I mean, everyone fell for it. Everyone fell for it, from the politicians to players to big celebrities, right? How do you kind of navigate that route and you like ride through that journey, but have a risk management in some sort of the risk management on your mindset? How do you navigate those kind of the next upcoming bull run?
It's a great question. There's so much uncertainty in regulations, especially because every country is trying to create their own, which in a decentralized industry, right, or industry that it's really available to everyone. So this is the real tricky part, right? Ethereum is traded on every single country on the planet, but every single country on the planet has a different policy when it comes to Ethereum, right? Or when it comes to an asset, right? They all have their own regulations. They all have their own laws. There isn't a universal law when it comes to crypto. So it's going to always be very challenging based on where you live, how the industry is going to evolve in your country, in your jurisdiction. In the US, I do believe that regulatory pressure is going to increase over the next 12 months as institutions are going to begin to demand it. Institutions that keep filing for ETFs and keep filing for more legitimate traditional finance tools that exist, right, like electronically traded funds, they're going to demand more regulatory scrutiny on the space so that they can protect their investors. And you're going to start to see a way where MetaMask at some point may have to subdue to the government and begin to KYC certain activity. Otherwise, it'll always be the Wild Wild West. And no matter what, it will always be the Wild Wild West because there'll be other companies that create decentralized wallets and decentralized storage mechanisms for Web3 to combat that. So I don't think we're anywhere near close to any resolution as to what the regulatory landscape is going to look like. I think it's going to be the only way to really, I guess, safeguard crypto, right, is to make sure that you control the on ramps and the off ramps, right? That's really the only way, and that's where I believe regulation is going to hit the hardest. It's not so much in the space, but it's going to be when it comes time to get out of the space, right? When it comes time to move money from the space, and when it comes time to spend that money, you're going to have to show where that money came from in many other places. So retailers that accept cryptocurrency are going to require you to KYC if you spend a large amount on a purchase, right? Because you may want to go, well, I'll buy a car with my crypto gains. I'll buy a Lamborghini. Well, Lamborghini may require you to KYC. I don't see why they wouldn't, right? Because you're going to buy a car from them. So now they'll have your data, and that data will be available to the government, right? Don't know. Then the government may go, well, how did this person get $250,000? Where did that money come from? And they'll start digging into your wallet history, and then before you know it, you're getting the IRS knocking on your door. And I think a lot of that is going to be the only logical way that you can track down bad actors is you got to catch them when they're spending the money, because it's very difficult in the space to regulate every wallet, to regulate every service, to regulate everything in the space because of the decentralization aspect of it, right? Even the SEC is trying to sue Uniswap and trying to get Uniswap under their belt, and it's impossible, right? It's very, very difficult to do it because they operate in a decentralized manner when it comes to their custody, right? They don't custody anybody's assets. So what are they responsible for? They're just responsible for making sure that the platform works. So, and if they shut it down, right, most of these platforms now live in the interplanetary file system, right? They live in the IPFS. So they're not even hosted on AWS servers anymore. They're not even hosted on places that can be shut down. They live on the internet. You just have to fire up a new front end, and the new front end has all the information there. So the reality of it is, it's very difficult to attack crypto unless you do it on the on-ramp and the off-ramps. And that's what the government is going to go heavily after. They're going to go heavily after on-ramping and off-ramping and and what happens when you're ready to spend the money.
Awesome. Being anonymous yourself, right? What do you feel about the this on-ramp and off-ramp thing and government getting involved in it? And if someone wants to be anonymous throughout the process or their journey with the crypto, is it possible? If so, how?
It's not. Exchanges know who I am. It's impossible to enter unless you've been in this space already, right? Or you do a sort of offline transaction or OTC transaction where somebody in the space funds you and you pay them cash in the real world. There is no way to stay anonymous anymore. Unfortunately, that is what the space came to. Everybody wanted institutions to be involved so there will be more liquidity. Well, this is the byproduct of institutions being involved. You don't get privacy. Institutions kill privacy. They don't like privacy. They need to have all your data. They need to have all your information. So therefore now you can't on-ramp in crypto without being KYC, at least not a significant amount of money, right? So the reality of it is the days of you being completely anonymous in crypto, unless you are already in the space, those days are gone. You entering the space today, the exchanges are going to know who you are. Now, they have privacy laws that they need to respect, right? So that's the reality of it. When people tell me, oh, let me unpack something here. A lot of folks are scamming and scamming and scamming and scamming. And the reality of it is they think that they can just get away with it and forever. And that won't be the case. That won't be the case. There's going to come a time where all these people that I have been scamming, all this history is on chain forever. People don't understand that everything you do can be tracked, right? And as AI evolves and artificial intelligence really gets to that next level, privacy on chain will end. All these advanced government agencies are going to drop an AI algorithm on chain, and they're going to find every single transaction you've done to the day you started and every single wallet you've interacted with, and they're going to do that in seconds because AI is going to be able to process all that data, and quantum computing is going to be able to process all that data in seconds. And you and all your dark past and everything you've done is going to come to light in a matter of seconds. So all these folks that think that scamming is a good way to make a living, there's going to be one last scam that you run, and that one is going to get you for everything you've ever done in the space. And it's going to be a very, very interesting type of witch hunt when that does take place. All these influencers on Twitter with millions of followers just endlessly shilling tokens and endlessly shilling schemes. All these celebrities, you already start to see celebrities paying the price. They're getting sued, right? They're getting fined by the SEC. You're going to see all these personalities on crypto that have been shilling tokens for years that have been part of rug schemes. You're going to see them have to answer at some point, and it's gonna the hammer's gonna come down hard and fast. And I do think you're going to see a mass exodus of all these older crypto guys that have a dark past in the space.
Yeah, that is one of the most optimistic thing I've heard in a week regarding the crypto and the regulation. That is awesome. So moving on to the trading side of your journey, crypto, and the trading in crypto itself, it can be volatile and very much unpredictable, right? Can you talk about your journey in developing and refining your trading strategies over time?
Trading is an interesting topic, right? Because there are seasons, right, where the market is very generous, and there are seasons where the market is not forgiving, right? It's a very unforgiving market. And based on that season, your strategy has to shift. If you're in an unforgiving market, you can't treat it like a forgiving market. You can't treat it right, because every single candle that looks like is going to take you to the promised land is instantly sold into, and you get caught buying tops, or you get caught shorting bottoms. Those are unforgiving markets. I call them the sideways markets. Right, sideways markets are very unforgiving. All right. So as a trader, there's a couple of things that play in place. One, the market psychology plays a big part, and then your own personal psychology plays a big part. Right, where you are in a state of mind when it comes to money will determine what type of trader you're going to be. If you have a strong love for money, you're probably going to be a pretty bad trader. People that tend to love money tend to do very bad or very poor as traders in general. I'm talking retail traders, right? I'm not talking about institutions. But retail traders that seem to love money end up giving it all back at some point in time. And that's because they don't know when to stay out of the market. They feel like they must be in the market at all times because there's money to be made at all times. And if that is your approach to trading, if your trading approach is, I must make money all the time because you can make money all the time, then guess what? You will give it back to the market at some point in time. You have to understand the market is it's an unbeatable machine. You cannot beat the market. You can only take from it for a period of time, right? And the law of diminishing returns, it's a concept that a lot of people should study and look into it, right? The longer you are exposed to an asset, right, the longer you're exposed to the market, the less likely you are to be profitable. It's just the way that it works, especially if you're leverage trading, right? If you're spot holding, there's a chance that you might make it. But if you look at the law of diminishing returns, if you missed out on the 2021 run, you are done. Most likely, you are not going to recuperate any of the majority of those funds. Most projects, when you look at concept of math is very interesting. When a project goes down 50%, it needs to go back up 100% for you to get back to break even, right? When it goes down 60%, now you need to go well over 100% in order to go back to break even. Well, when it's down 90%, a project needs to go up 1,000% in order for you to get back to where you were. Meaning, if a project was $100 and now it's trading at $9, it needs to do a 10x for you to just get back to where you were at the very beginning. Meaning, it needs to increase in price by 1,000%. If your portfolio is made up of a majority of tokens that need to go up 1,000% in order for you to just get back to where you were, you have a very, very small chance of succeeding. So that's why the law of diminishing returns is a real thing, especially in startups. If you stay in the market too long and you stay too exposed to the markets, then you get caught in the cycles. And most companies fail on the cycle. As the cycles are switching from bullish to bearish to back to bullish, there's essentially a cleansing of projects that fail and don't come back. They just don't have the resources. They get abandoned. The original investors just sort of call it quits, or the original founding team calls it quits, and they go do something else. And that's the reality of it. So you may be holding a bunch of bags that are still there because they exist, but eventually they'll get delisted from exchanges. Eventually they'll begin to die down. The community will begin to just say this was a scam. And the reality was everybody's waiting for the 2021 run to get out. And that's just, who are you going to fool? You need a bunch of new liquidity in order to exit everybody. So you need to fool a whole new generation of people to invest it into the project. And you can't do that across 10,000 projects. There's just not enough participants. There's not enough liquidity. So at the end of the day, the reality of it is, as a trader, you need to not fall in love with projects. Falling in love with projects is one of the biggest mistakes that traders make. They fall in love with the project like the project owes them something. They don't owe you jack shit. They don't owe you anything, right? Most founders are there to make money for themselves. Yes, they want to provide a product, yes, but the end goal is to make a boatload of money. 99% of projects in crypto are not charities, right? They're not in here to make your life better. They're in here to get rich. They want to make money. They want to get rich. These are financial instruments. They are not creating. Most crypto companies are not hospitals or restaurants. They're not here to provide a daily service. They're financial instruments. The end goal is to make money and provide a service for a user. So if a project gets to a point where it no longer meets that goal, then more often than not, users abandon it and it dies. So here, when you're entering the space now, I mean, you just have to take all these things in consideration as a trader. You can't hold a project forever. Once it goes through I call it the rules of market caps, right? If you get into a project under 1 million market cap, right, you need to exit the project every time it enters a new tranche, right? So one of the ways that I may be very successful in exiting projects is that if I enter a project under a million market cap, I sell a little bit between a million and 10 million. I sell another little bit between 10 million and 100 million. I sell another little bit between 100 million and a billion. And then I exit when it's over a billion. Because why would I hold a project once it's well over a billion? If I'm in it from the early days, why would I hold it into the billions? My probability for a 10x there is greatly diminished. I'd rather take all those profits and go into another project where I can do 100x or 200x in a lower market cap. And that's why meme coins are so attractive. But the reality of it is, it's a long shot. I'd rather focus on projects that have real use case with low market caps, because at the end of the day, that's what's going to last and that's what's going to be sustainable.
True. That is true. And the reason a lot of people, including me, I lost it too, right? Is people get married to the coin. Like you said, if you are the early investor in some coin and then it reaches to 1 billion market cap, they feel, I have talked to many people as well, and they feel like it is part of them now. One of my friends, he invested in those when it was like less than a cent. It was like 50 cent, 40, 55 cent. I told him to sell it, but he got so attached to it, he didn't sell it back then. And the market dropped and everything, just whatever he made, it is gone, right? So that is a very important thing to identify as a trader, is the law of diminishing return, as well as don't get married to the coin. You are here to make money as a trader, not to get married to the coin. That is very true. Moving on to the failure side of it, right? Every successful trader has faced some kind of failures or some kind of challenges, right? Can you share some significant failure that you have experienced in your trading journey, and most importantly, the lessons you learned?
Absolutely. I've had plenty of failures, more than I care to recollect at this point in time. The reality of it is, trading is a zero-sum game. For every winner, there must be a loser. For every loser, there's going to be a winner. That's the reality of it. If you think that you're always going to win, the reality of it is, when you lose, you're probably going to lose everything, because you're going to take an unnecessary amount of risk. So you need to understand that you will lose. Now, your job is to manage those losses so that they aren't greater than your victories, right? So they don't offset your wins, because then all you ended up doing is losing money and time. And really, I care more about time than money. So the reality of it is, when you one of the biggest losses that I've had, and you also have to understand the time period. So I've lost well over 50 some odd, maybe close to 60 or 70 Bitcoins in my lifetime in crypto. Now understand that Bitcoin, people think of that and they go, wow, $3 million, $4 million. But Bitcoin wasn't always $60,000, right? Bitcoin traded at 6, 7, 4, 10 during my period in the space. So the reality of it is, in US dollars, it was a much lower amount. But nevertheless, what it became years later was a significant amount of money. And when I think about the losses that I've suffered in this space and what led to them, a lot of it was just poor risk management. Really, when it comes down to it, it was just poor risk management. I was over leveraged. Over leveraging is a really easy thing to do because it's just buttons on the screen. So 100x, 50x, right? It just is very attractive to over leverage your account. So for traders, one of the biggest mistakes they make early on is they don't know how to manage risk. They don't know how to manage risk. So when they lose, they have 10 positions open. And when they lose a bunch, because when most traders don't practice asymmetrical trading, meaning they don't behave on the way up as they do on the way down, or they don't behave on the way down as they do on the way up. So on the way up, they tend to take profits early. They tend to close positions early, right? But on the way down, they tend to hold them, right? In case the market bounces. But that's a very poor way to approach a risk management, right? Because if you're trading differently on the way down than you are on the way up, or if you're trading differently when you're suffering losses and when you're suffering victories, then what's going to happen is you're going to be two different persons based on what's happening. And you need to be the same person whether the market is going up or down. So for me, when a trade reaches a point where I'm no longer satisfied with the outcome, I just take the loss, because there's going to be another opportunity to make it. But when you sit there and you write it down 60, 70, 80% to zero in some cases, it's just poor risk management. So most traders just need to practice good risk management. Whatever behaviors you do on the way up, do them on the way down. If you take profits early, take losses early. If you hold on for profits long, then hold on for losses long. But be the same person up as you are down. Because if not, what ends up happening is you just are constantly battling two personas. You're constantly battling the bullish side of you and the bearish side of you. And most people are, as we'll call it in this channel, right? They're long-term bulls. They're forever bulls. They only know how to be bullish. So they just keep buying every dip. They don't think about shorting. They just keep doubling down and tripling down and quadrupling down. And what ends up happening is eventually they just get their account burnt because they can't see what's happening in front of them. So whatever you're doing on the way up, just do it on the way down. And I found for me that has yielded the best success. But I have experienced some horrific losses. I mean, one time I lost $110,000 in a 24-hour period, and that's a lot of money to lose in one day. But over the course of a week, it ended up being hundreds of thousands of dollars because of the spiral that it took me on. So if you are not, there's so much that goes into trading psychology. We don't really have enough time. I do talk about some of this stuff in my course, and I talk about it on the Discord. But the reality of it is, experience is the best teacher. Pain is the best teacher. So when you lose money, you need to learn the lesson of why you lost that money and immediately begin to apply it. Right? It's not time to mope. It's not time to sit there and wonder what you could have done better and beat yourself up. The reality is, the event has happened. It has passed. You lost money. It's done. The money's not going to be deposited back into your account. There's no refund button. So whatever happened, just move on from it as fast as humanly possible.
Exactly.
Because there's another play.
That is the core reason why we started this community as well. Yes, it is part of the journey. Like, you have experience, like I've experienced, and like many others who are going to be onboarded on this thing is going to be to experience it. There are going to be loss. There are going to be gains, right? You're going to make money. You're going to lose money. Risk management is one of the most important skill, underrated skill that you have to learn. And again, documenting the journey about what went wrong and what went right, and kind of enjoying the journey rather than, like you said earlier, instead of focusing on, okay, I'm here to make money. If you just shift your focus from, okay, I'm here to enjoy the journey that I'm going through, I think that can significantly shift a lot of people. The amount of the potential of the return they are making right now, it can significantly increase that thing.
Go ahead. Well, I'll give you one. I said it on the Discord this morning. Most people overestimate what they'll do in a year and underestimate what they'll do in 5 years. Everybody wants to get rich their first year. Everybody wants to figure it out in their first year. And they underestimate what just meticulous, carefully thought out, planned out behaviors can do over the span of 5 years. And the interesting thing is that they end up spending the time anyways. So they end up spending 5 years making the same mistakes and beating their head against the wall, when if they just simply did what they were supposed to do from the very beginning, instead of trying to rush the results. You don't go to the gym and exercise to get a six-pack your first week. That will be an idiotic approach to the gym. But that's how people treat crypto. Everybody in crypto wants to get a six-pack their first week in the gym, and then they're upset when it doesn't happen, and they call it a scam. Yeah. To me, it's a very immature, and that's also why the majority of the landscape of crypto is made of immature investors, because they think that it functions as a microwave, get rich quick, because of the idea they've been sold with the meme coins. And the reality of it is, it just doesn't work that way. But if you do it consistently for 4 or 5 years, you will make a significant amount of money. Some most likely life-changing money if you are consistent.
This is a huge shift towards the finance, and a huge opportunity for anyone to make money. And like you said again, if you stay consistent and if you are here for a long run, there's a huge probability that you will make money. But if you're just here to ride the bull run and then make $1 million from your $1,000. Good luck with that. We'll see, right? Moving on to your own personal venture, right? You often talk about building an imperial army of crypto and enthusiasts, right? How do you envision this community growing, and what role do you think the education play in it?
That's a great question. My goal on social media is to provide bite-sized value, right? Over 30-second clips, right? That's what the Crypto Bytes channel is about. It's about giving a bite-sized value. The reality of it is, I can't teach you everything that I know, but an Instagram reel, and if you think that that's the case, you obviously missed it. So the reality of it is, my goal is to give you enough to draw curiosity, for you to want to explore deeper, and for you to know that there are things that exist out there that can make your life easier, your journey easier. The community of CryptoBytes and the Crypto Anon, the idea of the Imperial Army is to build an army of educated, just really well put together community participants. And not everybody's going to fit in that. The 80-20 rule is real, right? So 20% of the community is going to drive 80% of all the activity, and the rest are just going to sit around and watch. And the reality of it is, that's just life. But when it comes to the Imperial Army, and the idea behind it was to build the largest decentralized community off of social media, and do it in a way that it served its purpose. That's why I turned down projects of shilling tokens, and I just turned down things that are designed to make quick cash grabs off of the community, because that's not the goal. The goal is to build a community so big that when we eventually do our token, and we do a fair airdrop, it's not going to be where the founding team gets to keep 90% of the supply, and then everybody gets 10%. No, I mean, everybody gets the same. Anon gets the same. Everybody gets the same. And we do a fair distribution across tens of thousands, not hundreds of thousands of users. And when that happens, you back it with millions of dollars worth of liquidity, and then you truly have an opportunity to be in control of your destiny, because everybody's going to start in the same floor. Everybody's going to start at the same price floor, at the same market cap, and it's going to be up to you whether you hold on, right, or not. And it's going to be up to you whether you attract other people to come to the community, whether you attract other people to come. And some of the mechanisms that I've built with the revenue share mechanisms, and some of the ideas that I have are very novel. I'm going to create an NFT revenue share mechanism that it doesn't exist in crypto today, just because it's an idea that I've had for quite some time, and no one has yet been able to deliver it. So I'm going to do it, and I'm going to do it in my own unique spin, because it lives inside of my head. So when I do that, it'll be a very attractive way for people to, one, bet on the project, and two, bet on themselves. And I know I'm being sort of, very, what's the word, general, or not giving you much here, because I don't want to reveal everything yet. I'm going to leave a lot of these things as the community scales. The next phase of the empire isn't really released until we get to 50,000 followers. So we have a few months or so at the rate that we've been going. And it's always up to the community as well for them to share the content and help us grow. But once we get to 50,000 users, then I'll begin to really truly reveal the grand plans, and really just begin to focus down on building the decentralized application, building the DAO. And my role is to just step back and not so much be the figurehead at that point, but be just another member of the community. I'm sure there are other experts that are going to show up. Some of my colleagues are going to come and join me in the journey as well. So there's going to be a lot of very, very smart, intelligent people inside of that Discord. So when the time comes, I think it'll be what we have planned. You guys are gonna like it. At least the original, the majority of the original community that was in, because there's always going to be new people coming in, right? So, but the ones that were there from the very beginning are gonna be very pleased.
That is exciting to see a community like that. And for the final question, what do you think it takes to be the ultimate bull?
If I was to give you one word, is consistency. It's really it. You just have to be consistent. Whatever you do, you have to be consistent. People tend to do something and it doesn't work and then they just stop. And the reality of it is you're going to get friction in anything that you do. Right? You're going to receive friction in anything that you do, and your job is to be consistent enough to push through it. I've been an athlete my entire life, and if I had quit every time I faced any adversity, I would not have made it very far. And everything, whether it's through sports or whether it's through finance or whether it's through relationships, everything is about consistency. If you do something consistent long enough, it would yield a favorable result, especially the activity is a favorable activity, right? If you work out every day consistently, you will eventually see results. It's part of it is the process. It is the byproduct of the process. But people aren't consistent enough to receive results. That's the problem. People in this day, this generation of new crypto participants, they try something for a week, it doesn't work, and they think that's it. So they go do something else, and then that doesn't work, so they go do something else. And then 6 months later, they're walking around going, I'm so confused. I don't know how to make money in this space. All I've ever done is lose money. Yes, because you didn't focus on one thing consistently for any prolonged period of time. So that's why if you're going to be a meme coin trader, be the best meme coin trader in crypto. Don't trade meme coins and then do DeFi and then do futures and then and just be all over the place. Be the best at what you're going to do and do it consistently, because when you do it, eventually you'll begin to find patterns, you'll begin to find behaviors that you can take advantage of, you'll begin to find loopholes, right? But you have to do one thing consistently. You have these people that essentially they're jack of all trades, master of none, right? So they're jacks of all trade and master of none. In crypto, that's 99% of all crypto participants. They're jack of all trades, master of nothing. They haven't mastered anything. They know how to do everything, but they haven't mastered one thing. And for me, if you're going to be successful, you're going to be the ultimate bull, right? If you're going to be the ultimate bull, you need to be the ultimate bull in something in crypto, right? In a specific area of crypto. Because the reality of it is there's too many sectors of the space for you to be an expert in. Right? I'm not an expert in meme coins, and that may piss off some people that are hoping to get rich off of my expertise in meme coins, but that's not my expertise. I'm not the ultimate bull in meme coins. I am a trader. This is how I made my fortune, is I continue to pay all my bills and fund all my ventures. So I am an expert at trading. It is what I am the ultimate bull of. Right? And then I possess knowledge of platforms that I just acquired of being in this space for such a long time. And I am an active student of the space. I'm always learning. I never pretend like I know everything, because it is impossible to know everything. The space is too big and moves too fast. So the reality of this, if you're going to be the ultimate bull, be consistent and master one thing that you can provide an insane amount of value to others on.
That is some powerful and wise information right there. It is indeed very true. Consistency, discipline, and patience can take you places that you never imagined. And thank you so much, Anon, for sharing your journey and insight with us today. And it's been really pleasure having you on the show.